GSR garu, I think someone is
some Dayaniva Sharma ఏదో వేరే ప్రోగ్రామ్ ఏదో కూడా ఓవర్లాప్ అవుతుంది మనకి.
No, someone.
Is okay, sir. It is okay. Sir, unmute.
Okay. Sir, Ramesh, mana Bhargavi గారిని చైర్మన్ గారిని ఒకసారి కొంచెం అన్మ్యూట్ చేయమ్మా. మన సంగ్రామ్ కృష్ణ గారిని కూడా కో-హోస్ట్ చేయమ్మా.
Good evening, sir. Ramakrishna, sir.
Ramakrishna garu, good evening andi.
Good evening, sir. Welcome from Nellore branch of SIRC of ICAI.
Hello, madam. Good evening. Good evening, everyone.
Good evening, sir. Good evening.
Good evening, Ramakrishna garu.
Good evening, sir. Good evening.
Sir, West Godavari branch, sir.
Namaste,
Yes,
sir.
West Godavari. Good evening, sir.
Namaste, sir. Namaste.
Sir, with your permission, shall we start? The latest news is Adukia sir is stuck up with the other program, and he is expected to come on 6:30. So definitely he wants to address all the chairman and delegates of this VCM, and he would like to come at 6:30, so that even Ramakrishna sir is also having some rest because it is a 3-hour session. So I request the permission from the Ramakrishna garu.
Absolutely, sir. Please, please.
Thank you, sir. So nice of you. And with this, just I'll start the meeting. Sir, Ravi Kishore garu, about the this motor song.
Motor song. Yes, sir. Give me a second, sir.
Yeah. Please place your right hand on the heart. You need not rise for the occasion.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैत 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 एतद्वैत.
Thank you very much, friends. So, respected Central Council member, CA Dr. Rajkumar Satyanarayana Adukia sir, Chairman CPE Committee, Chief Guest of the Day in absentia, will go ahead with the regular meeting, sir. And today's resource person, CA Sangu Ramakrishna garu, an expert faculty in GST and a senior corporate advisor. My dear leaders from all branches of Andhra Pradesh, Chairman, Management Committee members, and more importantly, my dear professional colleagues, a hearty welcome to one and all. Indeed, it is a great honor for the Vijayawada branch to host a seminar of this nature. Actually, this VCM is the brainchild of our CCM Adukia sir, and definitely he will come by 6:30 and deliver his message. He would like to make every one of us as a masters in the real estate transactions. He has sent a 102 slides of the PPT also to you all, and I request you to kindly, because he is more concentrated on the Andhra Pradesh real estate sector, and definitely he would like to give about 15 to 20 minutes lecture on the real estate transactions at 6:30 today itself. And now I request A welcome address from the Rajamahendravaram branch by K. Sachiraj garu.
Thank you, sir. Sir, am I audible?
Yeah, perfect, sir. Go ahead.
Good evening, everyone. Hearty welcome to our Central Council member and Chairman of CPE Committee, C.A. Rajkumar Sachinaraditya sir, will join by 6:30 p.m. And today resource person, C.A. Sangu Ramakrishna Garu. And I also welcome all Andhra Pradesh branch chairmans and chairpersons, managing committee members, galaxy of senior members, members of the branches across the Andhra Pradesh to this grand VCM on real estate transactions. There is one quote, the whole is other than the sum of the parts. It means that even if we sum the parts, it does not equal the pride of the whole thing. This VCM is the best example for that. At this junction, I would like to congratulate Vijayawada branch for hosting this VCM in a successful manner. And thank you other branches for their support and being part of this VCM. I request all the branches in the Andhra Pradesh to continue this synergy for future programs, professional opportunities, and to represent common problems facing by our CA and students at SIRC level and ADAPS level for the benefit of members and students. If necessary, even before the state government, with respect to our profession or problems that we need to address at appropriate level. With respect to session, today is the last session for this grand VCM on real estate transactions in the GST Facet. Hope by the end of today's session, members can bring the compliances for the real estate transactions by virtue of different laws, that is RERA, income tax, GST, onto a same board for smoother planning. Thank you everyone for this opportunity. Thank you, GSR Garu, and over to you, sir.
Thank you, sir. Sachiraj garu. Thank you. That's a very good welcome address. Now, without wasting much of our time, let's know about our leader and today's resource person, Sangu Ramakrishna garu, from the words of our Ravi Kiran, Chairman, West Godavari branch, district branch of SIRC of ICAI.
Good evening, sir. Vice audible, sir.
Yeah, perfect. Go ahead, sir.
Good evening to all the branch chairmen and host branch of the Vijayawada branch chairman and committee of the Vijayawada branch for giving the opportunity for introducing of the C.A. Ramakrishna Sangu. He is very young and dynamic. So he is Ramakrishna is qualified as chartered accountant in the year of 2006, and he is a graduate in law and postgraduate in Master of Commerce and Business Administration from Andhra University. Post qualification, he worked as a Coromandel International Limited, Deloitte, Atkins, Cells and Chartered Accountants, Hyderabad. Later in 2017, retired as a partner, indirect taxation from Manohar Chowdhury and Associates, Chartered Accountants, and established R.K. Sangu and Associates, Chartered Accountants, based out in Vijay. R.K. is exclusively engaged in the practice of GST and real estate regulations and development with clients spread across the country. He is specialized in the area of the indirect taxation for the last 16 years. He was co-opted as a member of the Indirect Taxation Committee of SIRC, ICAI, for the year 2016-17 and 17-18 and 17-18 and 18-19. He acted as a chairperson of the Taxation Committee of the Andhra Pradesh Chamber of Commerce Federation and Industry for the year 2016-17 through 2020-21. He is a faculty of the students of ICAI, ICMA and ICS, as well as a member of the ICAI and ICS for the subject indirect taxation. He is a GST advisor board member for many central state public sector undertakings. He acted as an arbitrator in the matter of relating to the service tax, central exchange and GST. This is a very short note of the introduction of the Ramakrishna Sangu. Thank you for giving the opportunity.
Thank you.
Thank you, sir. With that, over to you, Ramakrishna garu. The floor is yours.
Yes, thank you. The screen is shared, right?
Yeah, perfect.
Yeah, thank you everyone, and for all the congratulating everyone and every branch in Andhra Pradesh who made these efforts and made all these 3 days sessions successful. The attendance also quite good, I was hearing. Now coming to today's session, real estate transactions and GST Facet. I believe in the first day, you might have heard of RERA versus real estate transactions. Yesterday about income tax and real estate transactions. So today we are going to see the GST implications on real estate transactions. So what we are going to cover. So what we'll discuss today is this: the taxability of construction and selling of apartments, the taxability of builders' share of flats, the taxability of landowner share of flats, the taxability of flats sold by the landowner of his share, the taxability of transfer of development rights, that is by the landowner to the builder, and then the recent hot topic, the taxability of development and sale of layouts, followed by questions. We'll take up questions. Now, what is taxable under the GST law? Under GST law, what is taxable is supply of goods or services or both for a consideration. For that, one may refer section 7 of the Act, CGST Act / SGST Act, which deals with supply. What is supply? So it says supply includes all forms of supply. It is an inclusive definition. It wants to extend the scope in such a way that it starts with the word includes and further says includes all forms of supply. So it tries to give by way of an example, and it wants to enlarge the scope of the supply definition. And it says supply includes all forms of supply: sale, exchange, barter, transfer, disposal, etc., for a consideration. For a consideration, it includes barter. Please keep it in mind. It includes barter for a consideration from one person.
Would you maximize the screen, sir?
Yeah. Sorry. Fine.
Now it's okay, sir.
Yeah.
Yeah, perfect.
So section 7 talking about the scope of supply. It says supply includes sale, transfer, barter, exchange, license, disposal, etc., by one person to another person in the course or furtherance of the business. So as long as you fall in any of the limbs of this section 7, subsection 1, you will get attracted by the provisions of the GST law. And what is taxable under the law? Only supply of goods and services. Sale of immovable property is not covered by the GST law. This schedule 3 transaction. Now what section 7 subsection 1A says is that section 7 subsection 1A says once a transaction is identified as a supply, as a taxable supply, okay, then you may refer to schedule 2 to the CGST Act / SGST Act. You may refer to schedule 2 and see whether there is an entry for your transaction. That means what is schedule 2? Schedule 2 talks about whether once a particular transaction constitutes a supply under 7.1. Once it is determined that yes, my transaction is liable to GST covered by section 7 subsection 1, then schedule 2 tries to find out determine whether that said supply is a supply of goods or supply of service. So there may be a question as to why the schedule 2. Schedule 2, the importance of schedule 2 is that it wants to, the background of schedule 2 is to avoid litigation and provide clarity with respect to certain transactions, stating clearly that whether a particular transaction is a supply of goods or a supply of service. Otherwise, we will be in a confusion. We know that a particular transaction is a supply, but we end up in a confusion whether it is a supply of goods or supply of services. Therefore, schedule 2 has been enacted. Now, what schedule 2 para 5b says? Schedule 2 para 5b talks about the construction services. What the 5B says: construction of a complex, a building, a civil structure or a part thereof, including a complex or building. Now this is important. Intended for sale to a buyer. Intended for sale to a buyer, wholly or partly, except where entire consideration has been received after issuance of the completion certificate, wherever required by the competent authority or after its first occupation, whichever is earlier, this shall be deemed to be a service. Why Schedule 2 saying particularly thus construction of complex etc. is a service? Because under the erstwhile law, we know there was VAT and service tax. Okay, and in any construction, there will be transfer of property in goods like cement, steel, iron, etc. And there will be a labor component. So there will be both supply of labor as well as goods. So when these two are there, we know what is the difficulty we faced in service tax law and VAT law. Identifying the value of the goods, identifying the value of the service, composition scheme, abatement scheme, filing VAT returns, filing service tax returns. Okay, dispute by the VAT department saying that this is goods and portion you have to pay VAT. All these litigations have come to an end with the Schedule 2. Now the Schedule 2 says that it is only a supply of service. So now you need not bother about the material component, labor component, how much is attributable to material, how much is attributable to labor, service GST rate, goods GST rate, multiple rates, all that comes to an end. It says construction of a complex is deemed to be a service. And most important point, when it is taxable, a construction of a complex is taxable when it is sold and at least any problem? Yeah. So only when it is sold before the building gets the completion certificate. So construction of complex services are taxable if and only if the consideration is received, any part of the consideration, at least single rupee you should not receive before the building gets the completion certificate. On the other hand, when it is not taxable, as per 5B of Schedule 2, if the entire consideration, full consideration is received after the building gets the completion certificate, only then the apartment sale is not subject to goods and service tax. This is not a new concept. It is there in the service tax law as well. The same was picked up, it's copied and pasted in para 5B. Okay. So now we understood. Excuse me. Yeah. Now para 5B talks about construction of complex service. Now in general terms, what is this construction of complex? What it involves? Construction of complex, a complex or a building can be of a residential building, can be a commercial building, or can be a combination thereof, partly of residential apartments, partly commercial. Okay. Now, how it differs from works contract service? Is there any differentiation between the works contract services and construction of complex service? For that, the Act specifically defined the term works contract. The term works contract under section 2119 of the CGST/SGST Act. It says it is a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, commissioning of any immovable property. So this is new. this is unlike your service tax law definition, where any contract where there is a material portion and labor portion are involved, it can be treated as a works contract service. But under the GST law, it is entirely different. Under the GST law, to be called as a works contract service, there should be a contract, and the contract is for construction of building, construction, fabrication, completion, etc., of any immovable property only. If it is not in relation to immovable property, even though there is a transfer of property in goods along with supply of service, it cannot be treated as a works contract. Then what happens? Then you may have to refer to section 8, where it talks about composite supply and mixed supply, where there is a more than one supply of goods or services or a combination thereof, when it will be called as a composite supply, when it will be called as a mixed supply, and the tax treatment are completely dealt by section 8. On the other hand, if there is a material component and a labor component, and the contract is for construction or any other ancillary activities relating to an immovable property like land and buildings, then it becomes a works contract. Now, in the construction of complex service, it is talking about construction of a complex building civil structure. In the works contract definition also, it is talking about a contract for building, construction, fabrication of an immovable property. Then what is the difference between the two? Are the two same? Are the two one and the same? Or is there any difference? When it will go to construction of complex service, when it will go to works contract service? For this again, schedule 2, if you see schedule 2, para 5 talks about construction of complex services and para 6 talks about works contract services. That is the first demarcation in the act or by the law. So they want to see them differently. They want to give treatment separately. So they put it under 2 clauses under schedule 2. And no doubt that both are composite supplies. Composite supply means that both works contract services as well as construction of complex services involves transfer of property in goods during the execution of the contract as well as labor. That is, material component will be there, labor component will be there, both in works contract services as well as in construction of complex services. But still, there are differences. What are the differences? Now, construction of complex services are covered by 5B, and 5B, it is not that every transaction of construction will fall under 5B. There are number of conditions to be fulfilled in order to attract 5B definition. That I will come in a bit later. Now, works contract services are covered by schedule 2, para 6A. Now, the major distinction. Construction of complex service covered by 5B deals specifically with respect to services of construction of complex building, etc., involving sale or intention to sell. So under construction of complex service, what happens? There will be a builder who develops an apartment consisting of number of flats, and he does that with an intention to sell. Okay, so he invites the people or general public or a group of people to buy his flats. That means there is an element of sale of flat by one person to another person. That the relationship between the two parties is like that of a buyer and seller, the builder and the buyer of the flat, or that of the service provider and service receiver. Okay, and construction of complex service involves an important aspect of completion certificate. Completion certificate. That means if you you might have read RERA, AP RERA recently on the 2 days before. Now what the AP RERA says? AP RERA says whoever is constructing residential or commercial apartments which are intended to be sold, which having more than 500 square meters of land area, or construction of more than 8 units, must register themselves with the RERA authority. You must register. You must upload all the documents, all the details, brochures, agreement for sale, how to enter into an agreement for sale, when to enter an agreement for sale, what are the various aspects that are to be observed by each builder, his commitment to the buyers, etc., etc., etc. So, which is specifically for the builders segment who are constructing flats which may be residential or commercial and which are intended to be sold to an outsider. So this is having a separate characteristics like construction of number of units, selling of the flats or intention to sell the flats, and that too it is taxable only when you sell the flats before the building gets the completion certificate, etc., etc., etc. Okay. Generally, this contract is one to many. That means there will be one builder, generally one builder. If there are 30 units, there may be 30 buyers. Some people may buy before building the gets OC. Some people may buy after the building gets OC. Some flats may be retained by the buyer. I mean, by the seller, that is the developer. But what is works contract? What is works contract? Works contract involves material plus labor in relation to immovable property that need not be a residential apartment or commercial apartment. Okay. In relation is that, and see, in works contract, there will be generally only two parties, contractor, contractee. For example, you have a land, you want to construct a godown. Now you want to give contract for construction of the godown to X. Now you people enter into an agreement. It's a contract. It's an agreement between the two parties. The person who executes the work is called the contractor. The person who assigns the work is called the contractee. And for him, the other party comes and executes the contract or construction work and hands it over back to the other party or contract. There is nothing like construction completion certificate, intention to sell or sale, etc., etc., because the land is already owned by the contractee. The contractor only comes for execution of the work, he executes and he goes off. That is works contract. So, though both the activities involves construction of an immovable property, yet there is a lot of difference between a works contract service and a construction of complex service as highlighted here. Moreover, the set of rules, law, rates of tax, exemptions, abatements applicable are different for two sets of transactions. So therefore, we should understand, and at the beginning of any case, we should segregate whether a transaction is a works contract service or a construction of complex service, because that is the starting point. That is the starting point to understand or to apply what provisions are to be applied with respect to the file on hand. This is also called as popularly classification of service. What services your client is doing, whether he is doing a construction of a complex service covered by para 5B of schedule 2, or is your client is providing services of works contract covered by para 6. For that, you need to understand the various elements in the contract and then decide whether it is a construction of a complex service. Of course, it is very easy to identify. Now, the next question. Now, we have seen that construction of a complex service is taxable. No doubt about that. Works contract service is a different part. It has nothing to do with the construction of a complex service. Once you found that it is taxable and it is deemed to be a service, though it involves both material plus labor, Schedule 2 says it is a service, that's all. When Schedule says something as service, it is a service. As something as goods. So Schedule 2 says construction of complex service is deemed to be a service, therefore it is a service. Okay, fine. So we understood, okay, construction of complex service is taxable, and construction of complex is not a composite supply, but it is only a service. It's a pure service. Unlike service tax law, unlike VAT law, where we used to pay both VAT as well as service tax separately, VAT on the material portion, service tax on the labor portion. Here, there is no such distinction of material or labor. Here, what we see is what is the selling price for this activity, and the entire activity is only a service. You can forget about the material portion. Okay, fine. Once we identified that it is a service, the next question is, what is the time of supply? When the builder is liable to pay tax? See, who has to pay tax? There are a lot of complexities, different stages are involved in this particular category of service. It's always considered to be complex, like or difficult, or complicated. But the time of supply will remain the same with few exceptions. Now, what is time of supply? Time of supply means when you or your client as a builder constructs a 20 units apartment and he starts selling it. Now the question is, when he is liable to pay tax? What is the time at which he is liable to pay tax? You may say on the sale of flat, of course on the sale of flat, but it is a service. It is a service as per 5B of Schedule 2. Therefore, we have to see Section 13 of the CGST/SGST law, which prescribes the time of supply. That is the point of time at which the service tax is to be paid by a service provider. When he is liable to pay service tax? We all know, with respect to services, it is the date of issue of invoice or date of receipt of payment, that is the consideration, whichever is earlier, if invoice is raised. So if invoice is raised, the date of invoice or the date of receipt of payment, whichever is earlier. But again, real estate sector being highly unorganized, we generally don't see builders issuing tax invoices or invoices to his clients. We never see. Okay. And moreover, it is unlike any other transaction of service or goods, where you provide a service, you receive a consideration in one shot. Okay. But construction of complex services is a different category where the provision of service spreads 2 to 3 years from the day of the foundation of the building till the date of getting the completion certificate and handing over the flat to the buyer. It takes 2 to 3 years or 4 years or 5 years, depending upon the size of the apartment. Okay, if that being the case, we will know in the agreement for sale between the builder and the customer, they will write the terms of payment. That is the various stages at which and how the customer, that is the buyer of the flat, has to pay consideration payable by him to the builder. Maybe on a completion of these slabs at some point, at a certain percentage of the amount, completion of brickwork so much, on registration or so much, or completion certificate or handing over balance, etc., 4, 5, 6, 7, 8 installments. So each time when a person receives consideration from the customer or the buyer, that is the receipt of the payment. Okay, they are supposed to issue either a receipt voucher for providing the service, for receiving the advance for the proposed construction service, or even they can issue a tax invoice. Because for continuous supply of services, again Section 13, It is a continuous supply of service. This particular activity falls under continuous supply of service. What is continuous supply of service? When a service is continuously provided for a term more than 3 months, it is called continuous supply of service. In case of continuous supply of service, what is the time of supply? The time of supply shall be each time the person, that is the buyer in this case, who is required to pay money upon completion of an event. That will be the time of supply. So each time, for example, in your agreement of sale, you have written 4 times, 4 installments upon completion of different percentage of completion of the project. Now each that payment schedule is a part completion of the service. Accordingly, by that date, that is the due date for payment of that installment by the buyer to the builder, that is the time of supply. And by that time, from 30 days from there on, the builder is required to mandatorily issue a tax invoice. It is mandatory. He is required to issue the tax invoice, and the next month he should show it in his GSTR 3B and GSTR 1 and pay the GST to the government. Okay, even if before this date the clients come forward, the customer comes forward and pays the money, that is called advance, then you show it as an advance and pay the GST with that date. So whichever is earlier. Accordingly, the time of supply shall be determined and GST shall be paid. However, this provision of section 13, as far as in relation to construction of complex services are concerned, there are some exceptions. That is, in few cases, the time of supply will be different. It deviates from section 13, that we will discuss. Next. So we have seen the time of supply, and the next one is place of supply. So we all again know it's 5 years, and even in the service tax law we have the place of provision of services rules, and now it is place of supply. That is, once you identified the time of supply, now the next question is, what is the place of supply? The place of supply means the place where the services are said to be provided. The place where the services are said to be provided. Why this is important? This is important to determine whether a particular transaction of a service or supply of goods, whether it attracts, whether it is to be classified as an intrastate transaction or interstate transaction. So the place of supply is relevant to identify whether a particular transaction is an intrastate transaction or interstate transaction. Why? What is the difference if it is intrastate transaction or interstate transaction? Again, we all know, if it is an intrastate transaction, we have to apply SGST, CGST. We have to charge the state GST, SGST and CGST. And if it is an interstate transaction, it is an IGST transaction. So for that purpose, we need to know whether it is an intrastate supply or interstate supply. If the service provider and the place of supply or happens to be in the same state, it is an intrastate supply. If the service provider and the place of supply happens to be in different states, then it is interstate supply. But generally, first of all, for place of supply, you need to refer section 12 and 13 of the IGST Act, which I have not, that slide was missing here. Okay, based on that, you have to see. As far as construction of complex services are concerned, the place of supply is the place where the immovable property is situated. So therefore, if the service provider and the place of supply happens to be the same state, then SGST, CGST will come, and 99% of the cases, as far as immovable property construction is concerned, SGST, CGST will come. Next. So we are going to the next leg, rates of tax. Rates of tax. When GST law was introduced, the intention of the government is to provide the input tax credit across the supply chain seamlessly. Okay, they want, there should not be cascading effect in the supply chain. Across the supply chain, there should be a seamless ITC, flow of ITC. Accordingly, initially, for construction of complex services, these apartments construction services, they prescribed 18% as the rate of GST and provided 1/3 abatement from the taxable value or the selling price, popularly selling price, thereby giving an effective rate of 12%. Why this 1/3 abatement from the selling price? This 1/3 abatement they are giving for the reason that the selling price is towards or consists towards a part which is land. So the selling price which a buyer pays to the builder is towards the undivided share of the land plus construction service. Land is non-GST supply, there should not be GST. Therefore, what the law says is that instead of allowing people to adopt different values or different valuation for value of the land and material plus service, they kept uniform abatement, stating that towards the land, I will give you 1/3 reduction from the selling price. Let me take an example. If 1 crore is the selling price of a flat, if 1 crore is the selling price of a flat, 1/3 of it shall be deemed to be land value. So therefore, from 1 crore, you remove or you deduct 1/3, that is 33.33 lakhs. Now, on 66.67 lakhs, you are required to pay 18% GST. This was the case. This is not right now. This is not the story. I'm telling you, when the law was introduced on 1/1/17, this is the situation. 18% is the rate of GST, 1/3 abatement in the taxable value or taxable rate also. Therefore, you will get 12% effective rate. So 1 crore, you can say two ways. 1 crore minus 1/3, 66.67 crore lakhs into 18%, or you can straight away 1 crore into 12%. So 12% is the effective rate of tax. Seems to be very big rate on 1 crore when a person is buying for a flat. But the advantage of this scheme is that they provided input tax credit benefit. They have given the benefit of input tax credit. That means the builder who is required to pay 12% effective rate of GST on his outward supply can avail ITC of GST paid on inputs, capital goods and input services which are used for construction of the complex from which he is selling the apartment flats. So on an average, he must be incurring 20% input tax, because most of the goods and services attracts 18% cement, steel, iron, etc. And cement is 28%. Some capital goods are 28%. Okay, so all these he can claim input tax credit, and he can use it. He can use it for the purpose of payment of output tax, and he can pass on the benefit to the customer by way of reduction of output tax. But that was not happening. That was not happening despite provisions of anti-profiteering. So on moreover on that, both the people as well as the industry start feeling that 12% is very high rate. It's a huge rate. So the various associations, builders and all, they represented to the government to reduce the rate of tax. Now what the government did, effective from 1/4/2019, they have come out with a altogether new tax structure. An altogether new tax structure for construction of complex services through a beautiful notification number 3/2019 CTR, which is the mother notification. They changed the complete story. The old structure is that 18% is the rate of tax, abatement 1/3, effective rate 12%, input tax credit is available. That's all. This is very simple, easy to understand. Now, from here, we went to notification number 3/2019, which I'm saying now in a cut short, in a snapshot. In detail, we will discuss. Now, what 3/19 simply says is that I have fixed the rates, I have amended the rates, I have changed the rates of tax, I have reduced drastically, but I am giving a discrimination towards affordable residential apartment and other than affordable residential apartment. I fixed the rates accordingly. I reduced it to 1% or 5%. I'll discuss that in a while. But no ITC. One cannot claim the benefit of input tax credit. You cannot claim ITC. ITC is gone. You simply pay 1% of or 5% of the selling price. That's it. Over. Now it is not the time to discuss whether it is a good or bad. It's definitely not in the spirit of the GST law, but we are not going to discuss that at all. Why? What is the implications? How cost has increased? How the prices have gone up because of this new scheme? Okay, how it has impacted the customers? All this gone. It's over. Now let's proceed to 3/19. Now here onwards, there will be a bit complexity or complications. So I'll try to, come back each time wherever I feel, I need to repeat it. Now, for the purpose of rates of tax, notification number 3/2019 divided or classified the projects, apartments, the buildings, the projects into two categories. One category is called residential real estate project. Residential real estate project. Now, going forward, there will be various terms that will be used. And there are definitions for each term. Like, for example, just now I used residential real estate project. What is residential real estate project? Residential real estate project is basically a residential project in which not more than 15% of the total carpet area you have constructed or the builder has constructed commercial portion. That means you have approved, you got a plan approval for 10,000 square feet, in which first floor will be commercial for 5 floors. First floor will be commercial, balance 4 floors are residential. Okay, fine. Now, what is the category of this project? Whether can we call this as residential real estate project? We can call this project as residential real estate project, but the commercial portion, but the commercial portion, that is the ground floor where you have built commercial portion, that should not be more than 15% of the total carpet area of the entire building. In our example, the total carpet area of the entire building is 10,000 square feet. Of that, 15% is 1,500 square feet. 1,500 square feet. So if your commercial construction is, let us say, in this example, is 1,400 square feet only, it becomes a residential real estate project. Hope I am clear. Okay. On the other hand, if the commercial portion of the building is more than 15%, if the commercial portion of the building is more than 15% of the total carpet area of the building, then it is called real estate project other than residential real estate project. That's all. These are the two classifications. One is residential real estate project. We can say the other one other than residential real estate project. Why this classification is important will come, because the rates of tax are different. So this is the first step. What we need to see when a client comes with a plan approval, to see whether this is a residential real estate project or other than residential real estate project. Now, once you identified it as residential real estate project, then again, that building may have the following three classes. That project may have the following three classes of apartments, three types of apartments. One, affordable. So once you identify the project as residential real estate project, that may have three types of apartments. One is affordable residential apartment. The second one is other than affordable residential apartment. And the third one is commercial apartment. Let me take the same example, 10,000 square feet total carpet area, ground floor commercial, balance 4 floors residential. In that floor, 4 floors, two floors are exclusively the builder constructed affordable residential apartments, and balance 2 floors are other than affordable residential apartments. Ground floor anyway commercial apartments. Now next question, what is this affordable residential apartment? What is this affordable residential apartment? There is a definition. Affordable residential apartment means an apartment, a unit in the building. See, please understand, please note that affordable, that the moment we see the word affordable residential apartment, is not required that the entire building should be affordable apartments. It is not that all the units should be constructed as affordable units. No, not required. In a building, a part or a few floors may be affordable, a few floors may be other than affordable, and the balance may be commercial. Any combination, it can be any combination. Okay. So what is affordable residential apartment? Affordable residential apartment means an apartment whose carpet area does not exceed 60 square meters in metropolitan cities and 90 square meters in other than metropolitan cities. This is condition number 1. The carpet area, each word is important. The carpet area, it is not the total built up area or floor area, including common area and all. What is carpet area? It says refer your RERA law, your state RERA Act. There will be a definition for carpet area. As per AP RERA, Carpet area means the net usable floor area. The net usable floor area, including internal walls, excluding external walls, and also excluding exclusive terrace and veranda. This is the definition of the carpet area as per the AP RERA. 1 minute. So what he is referring is not the built-up area, but carpet area. The carpet area of the apartment should not be more than 60 square meters in metropolitan cities and 90 square meters in other than metropolitan cities. Condition number 1. Okay. Sir, my apartment, I have 2 floors. I have constructed where the units carpet area is less than 90 square meters. Will it become an affordable residential apartment? No, wait. Condition number 2. The gross amount charged for the apartment should not exceed 45 lakhs rupees. Okay, let us take a place like Vijayawada, non-metro city. Therefore, to classify as an apartment as an affordable residential apartment, the carpet area should not exceed 90 square meters, which equals to approximately 968 square feet. Carpet area 968 square feet. Plus, this is one condition. The second condition is it's not plus, or 45 lakhs rupees. The selling price should not cross 45 lakhs rupees. If either of these conditions are violated, that means either you crossed 90 square meters or you crossed 45 lakhs. It will not become affordable residential apartment. On the other hand, if your carpet area of the apartment is less than 90 square feet, 90 square meters of carpet area, plus the selling price is below 45 lakhs, then it becomes, or it qualifies as affordable residential apartment. So first of all, you should take a residential apartment. Once you have taken residential apartment, make it two parts. Affordable residential apartment, other than affordable residential apartment. What is an affordable residential apartment? Make it 2 parts. The carpet area should be less than or equal to 90 square meters, plus the selling price should be less than or equal to 45 lakhs. If these 2 conditions are satisfied, that apartment is a affordable residential apartment. If any of these 2 conditions are violated, not satisfied, that means either you crossed 90 square meters carpet area, or you have not crossed 90 square meters carpet area, but you crossed 45 lakh selling price, then it falls under the second category, other than affordable residential apartment. Hope I'm clear. And the third category, commercial apartment like godown, office, etc. Now, second classification projects, real estate projects other than residential real estate projects. What is the projects other than residential real estate project? It is a project where more than 15% of the carpet area consists commercial portion. Okay, if that case is, so if commercial portion, the carpet area of the commercial portion is more than 15% of the total carpet area of the entire building, then it falls under the second category. And again, within the second category, there may be an affordable residential apartment, there may be an other than the affordable residential apartment, or there may be commercial apartments. Okay. Okay. Now, what is residential real estate project? The definition, I have explained that. what is carpet area, what is residential apartment, commercial apartment, affordable residential apartment 90 square meters, 60 square meters. Now, having discussed about the categories of the projects into residential real estate projects, other real estate projects other than residential real estate projects, and within each category, again 3 parts consisting of 3 parts: affordable residential apartment, other than affordable residential apartment, commercial apartment. Why we are segregating like this? Because the rate of tax is different for each category of the type of apartment. Therefore, we are segregating like this. The first one is, the tree is 2 parts: residential real estate project other than residential real estate project. Now come to this part: residential real estate project, make it 3 parts. In that project, in that building, some flats are affordable, residential but affordable. Some flats are residential but other than affordable, and some portion is commercial. Okay, in that, if it is an affordable residential apartment, the gross rate of tax is 1.5%. I am telling, clubbing both SGST and CGST, 0.75, 0.75, 1.5. You have an abatement of 1/3. So remove 0.5. So the effective rate is 1%. Okay. Now coming to other residential apartments, that is other than affordable residential apartments, the effective rate is 5%. That is 7.5% is the gross rate. Deduct 1/3, you will get 5% effective rate of tax. And commercial apartments in the same project, third category of apartments, commercial. See, this is the beauty and advantage of being a commercial unit in residential real estate project. It says, though it is a commercial apartment, but if it is part of a residential real estate project, the rate of effective rate of tax will be 5% only. Sir, can I take input tax credit? The answer is no. The rates have come down, and that's why they said no ITC. So from 1/4/19 onwards, all projects coming under this category, this is the only option for them. They cannot say, sir, I'll pay 18% with abatement and I'll take input tax credit. Nothing doing. You have no such option. You have to follow this scheme only. There is no other scheme for builders engaged in construction and selling of apartments effective from 1/4/19. So 1% affordable, 5% residential but not affordable, again only 5% commercial. Now go to next slide. This is second category of project, other category of project, that is residential real estate project other than residential real estate project. Real estate project other than residential real estate project. Again, same 3 categories. Affordable, other than affordable, commercial. Affordable, again same story, 1% effective rate without ITC. Other than affordable, again same story, 5% effective rate without ITC. Commercial, here the story changes. Commercial apartment in a real estate project other than residential real estate project. Okay, so in that cases, the rate of tax remains 18%. You can take 1/3 as an abatement. Therefore, effective rate of tax of 12%, and you can claim input tax credit proportionately. So, whenever there is a project other than residential real estate project consisting of commercial portion, you are required to pay 18% GST with abatement of 1/3 value, but you can take ITC. Sir, how can I claim ITC? My ITC will be common for the entire building consisting of affordable residential apartments, consisting of other than residential affordable residential apartments and commercial. My cement bags, my cement, steel, iron, etc., everything I have used for the entire building. Now, how to claim the input tax credit? Now, read section 17, read with 42, rule 42 and rule 43. A person who is engaged in providing both taxable as well as exempted services. Okay, so you have to apply rule 42 for inputs and input services and rule 43 for capital goods, and accordingly claim input tax credit for this portion of commercial construction. Okay, on the other hand, there may be a project which is 100% commercial. In that case, there is no issue. 100% commercial. Now, so far we are seeing a combination of projects where there is a combination of affordable, other than affordable, and commercial. There may be a building consisting of 50 flats, all affordable, or there may be a building consisting of 50 flats, all other than affordable, all more than 90 square feet, or there may be a building consisting of a completely 100% commercial building. Okay, so now with these two charts, you can understand, or you will appreciate where you will fall, okay. We'll go to the next slide. Now we have seen so far the rates of tax, right? The rates of tax, now we are clear. It is not depending upon the, the project or the plan approval that given to you. It depends upon the unit that you are selling, individual unit that you are selling. The unit that you are selling is affordable. It is 1% without ITC. In which kind of project it may be. And the unit that you are selling is other than affordable. That is more than 90 square feet or more than 45 lakh selling price. Then 5% without ITC. Coming to commercial, you have to see in what is the nature of the project. If your project is residential real estate project, 5% without ITC. If your project is other than that, 18% with ITC, you can take ITC proportionately. If your building is completely commercial, you can take full building ITC and you will pay entire building, entire flats, on all flats 18% GST. Okay, so the rates are slashed 1%, 5%. Wonderful. But are there any stars? Are there any terms and conditions? The answer is yes. Notification again 3/19 prescribes list of conditions to be satisfied or to be followed by the builder, okay, who is under this scheme. It doesn't mean that if you do not follow this, you will go some other scheme. You will go to some other scheme. There is no such scheme. There is only one scheme, 1%, 5%, 18%. You have to stay here, satisfying these conditions. So if I am violated, if you are violated, there may be additional taxes on you, but not any other alternative schemes. Let us see what are the conditions. First one, the new rate structure which is applicable from, because some of your clients may be having this, that's why I thought keeping this particular slide because it is a members session. So if your client is having an ongoing project, and what the notification 3/19 said, if your project is an ongoing project, what is ongoing project? That is, as on 1/4/19, as on 1/4/19, the project is still under construction. Commencement certificate should have been received before 1/4/19. Commencement certificate, that is the building permit order, should have been received before 1/4/19. Okay. Construction should have been started before 1/4/19. And a chartered engineer or an architect should certify that the building construction has been started before 1/4/19. And at least one or more flats booked before 1/4/19. So if these conditions are satisfied, which is there in the, I'm not going into detail because now almost 5 years, 3 years, now all are new projects. But still, if you satisfy the conditions of an ongoing project, and if you are a builder of an ongoing project or your client, he has an option to stay back in the old scheme. What is old scheme? 18%, 1/3 abatement, effective rate 12% with ITC. You can stay back in the old scheme or you can come into the new scheme. New scheme. Okay. This is very, very, very important, dear members. When 2019 audit starts, audit means audit by the department. When 2019-20 audit is commenced by the department people of your client's records, now this point will come into picture. Very, very important. Why it's so important? Now what the law says, if your project is ongoing project as on 1/4/19, and the law has given you an option to choose between the two, that is to stay back in the old scheme or to enter into the new scheme. Okay, you have stayed back. And if you want to stay back in the old scheme for the entire project, which is going to be completed by 2020, 21, 22 or whatsoever, it's fine. But you should have filed annexure 4 as prescribed in 3/19. You should have opted for old scheme, specifically mentioning the project name, etc. And you should have opted for it by submitting annexure 4 by May 20th, 2019. Then for that project, old provisions will apply. For that ongoing project, old provisions will apply. Wonderful. Fine. Okay, fine. So you have, for example, your client has opted. Good. For that project, he will go with the old scheme. Now the second situation. If you kept quiet, your project is an ongoing project and you have not opted to stay back in the old scheme by furnishing annexure 4. You have not filed, your client has not filed annexure 4 stating that, requesting the jurisdictional officer, sir, I am staying back in the old scheme. No, he has not given. Okay. Then he is automatically deemed to have chosen the new scheme. So, though his project is old project, ongoing project, but from 1/4/19 onwards, whatever he starts selling, for that new rates will become applicable. So, what is so much important? Why it is we should be very careful at this juncture when the department people comes is when your project is an ongoing project and you have entered into the new scheme, that is without ITC scheme, then what would have had happened is, as on 31st March 19, there might be input tax credit in the electronic credit ledger of the SSE of the client. That means he has claimed the input tax credit in 2019, 18 or 17, from 17 July. Let us say there is a one project who is started construction in 2017, and as on 1/4/19, it is still an ongoing project. It is going on. That means for 3 years he has claimed the ITC. So having claimed the ITC, he must be using that ITC balance for payment of the output tax. Okay, but now what happened on 1/4/19? He moved to new scheme. What is new scheme? 1% or 5% rate of tax without ITC. Now what 3/19 says is that, dear SSE, the input tax credit attributable to sale of flats or time of supply, technically speaking, the input tax credit attributable to time of supply falling on or after 1/4/19 is being ineligible. You have to pay back. How many people have paid this? Many people even doesn't know about this particular provision. So I'm giving an example now. You have a client started construction in 2017 for 100 flats. 1/4/19, the building is an ongoing project. He claimed 1 crore ITC so far. 20 lakhs is there in the balance in the electronic credit ledger as on 31st March 2019. 80 lakhs utilized. Out of 1 crore claimed, 80 lakhs utilized, 20 lakhs still in the balance. 20 flats sold, 20 flats sold, 80 flats are to be completely sold in the new scheme. Got the point? Balance 80 flats are to be completely sold in the new scheme. That means what? 20/80. 20 flats, old scheme, which are eligible for input tax credit mechanism. 80 flats, new scheme, not eligible for input tax credit. Now the 1 crore credit that you have claimed so far till 31st March 19, that 1 crore is belong to 100 flats. That 1 crore of ITC that you have claimed till 31st March 19 belongs to 100 flats, but you utilized it for payment of output tax on 20 flats. Now the law says, if there is no balance, first of all, you identify the input tax credit attributable to 80 flats. On a general understanding, rough calculation, 80 lakhs ITC belongs to 80 flats. 1 crore for 100 flats. For 80 flats, it is 80 lakhs. That means what? You are not entitled to retain this 80 lakhs ITC. But you already utilized 80 lakhs and you have balance only 20 lakhs in your electronic credit ledger. But the notification 3/19 says, no, you are not entitled to 1 crore, but you are entitled to only 20 lakhs because 20 flats were sold pre-new scheme. So 80 lakhs you pay back. Out of that 80 lakhs that you need to pay back, 20 lakhs there in the credit ledger, you reverse that. Balance 60 lakhs, pay in cash. Balance 60 lakhs, pay in cash. You have to reverse the ITC attributable to flats for which time of supply falls on or after 1/4/2019. So this clause is very, very important for those clients who have ongoing projects as on 1/4/2019 and jumped into the new scheme, but till not yet paid the ITC that they have claimed or used for payment of their output tax till 31st March 2019. Hope I'm clear. I'm going to the next slide. Okay. So the first condition is that this new scheme is not applicable to ongoing projects who have opted for old scheme and stayed back. Otherwise, all other projects, that is ongoing projects not opted for old scheme, and all other projects commenced on or after 1/4/19 shall mandatorily follow the new scheme. Now, the condition, second point to be noted is GST shall be paid only by using cash. Of course, we already know this. You cannot utilize input tax credit. So all that input tax will become a cost to the builder. Next one. This is the third one I discussed just now. You have to pay by debit in the electronic credit ledger or cash ledger an amount equivalent to the input tax credit attributable to construction in a project, time of supply of which is on or after 1/4/2019. I explained that. Now, the next major issue is that the transaction with the landowner by the builder. Now, generally, in construction of complex business, the builders enter into a joint development agreement with the landowners, because land will be owned by somebody X. I am the builder. I have the expertise in constructing the building. I approach the landowner. We sit together. We jointly enter into a development agreement. Let us say 1,000 square yards, 100 flats. For giving the land for development activity, I have to give him, that is the builder shall share 40% of the constructed area, let us say 40 flats, to the landowner, and the builder is entitled to retain and sell 60 flats. So keep this example for throughout the next 1 hour session. So there is a builder, a landowner. The landowner has 1,000 square yards of land. Builder approaches the landowner. They enter into a joint development agreement, whereby in consideration of giving the development rights, the builder has to share 40% of the constructed area to the landowner and 60% belongs to the builder. Okay, fine. Now, as a builder, my share, I am selling to outside buyers. I will pay GST. Okay, fine. Even today, till today, still people are asking, sir, landowner share. What is landowner share? That is the constructed area which is to be handed over to the landowner by means of JDA, Joint Development Agreement, 40% in our example, 40 flats. Sir, whether GST is payable on the 40 flats being handed over to the landowner. Notification 3/19 is absolutely clear, abundantly clear. Even before 3/19, you can read 4/2018 CTR dated 25th January 2018. where they prescribe the time of supply, point of taxation for this transaction. So therefore, there is no doubt in terms of this notification that the builder is liable to pay GST or discharge GST on landowner share. This is one clarification. Now, sir, if the builder handovers the flats to the landowner after occupancy certificate, still it is taxable, because para 5B of schedule 2 says sale of flats where entire consideration has been received after the building gets the completion certificate is exempted, is not taxable. Therefore, I will hand over the flats to my landowner after the building gets OC. Thereby I will claim exemption. The answer is no. Why no? Because the relationship of service provider and service receiver should not come into picture until the building gets the OC. Hope I am clear. The relationship of service provider and service receiver should not come into picture until the building gets the completion certificate. That is what para 5B says. But whereas in the case of landowner builder, the transaction itself is originated from joint development agreement. So that means there exists a service provider service receiver relationship from very beginning between the builder and the landowner, and therefore the transaction is said to have entered before the building gets the completion certificate, and therefore the landowner share shall be completely taxable in the hands of the builder, whether you hand it over at before OC or after OC. So it is nothing to do with the completion certificate as far as landowner share is concerned. Clear? Now, having understood this, now what 3/19 says? What the 3/19 says is the builder shall pay tax on supply of construction of apartments to the landowner. You boss, dear builder, you please pay the tax on landowner share. That is the fourth condition. Next. And again, 90% of the builders fail to fulfill this condition. And as a consultant or as an auditor, we should have a check on this. What is this condition? It says, dear builder, you must purchase your inputs and input services at least to the extent of 80% of value of total inputs and input services that you buy for the construction of this building in a financial year only from registered dealers. I am repeating. Dear builder, out of the total purchase of inputs and input services I am not talking about capital goods. Here this clause says inputs and input services, whatever amount total you buy in a financial year, out of that, at least 80% must be procured from registered dealers only. To take an example, sir, I bought 80 lakhs worth inputs in this year and 20 lakhs input services. Total expenditure towards inputs and input services is 1 crore. 80% of which is 80 lakhs. That means 80 lakhs rupees worth of inputs and input services you should have procured from registered dealers. Sir, I have not done this. It's not done. Then what happens? Then what the consequence? It's called shortfall. Shortfall of purchases from registered dealers. That means, let us say in our example, the builder purchased only 60 lakhs from the registered dealers and 40 lakhs from the unregistered dealers. But he should have bought 80%, that is 80 lakhs, but he bought only 60 lakhs. What is the shortfall? 80 lakhs minus 60 lakhs, 20 lakhs. What to do with this? Notification says on this shortfall of 20 lakhs, dear builder, you pay GST under reverse charge mechanism at the rate of 18%. And the law also requires notification. You should compute this annually at the end of the financial year. You should compute this annually at the end of the financial year by maintaining separate records of goods, services purchased from registered dealers, goods, services purchased from unregistered dealers, total purchases, 80% of it, actual purchases from registered dealers, shortfall into 18%, and this tax should have been paid by 30th June of the subsequent financial year.
Ramakrishna garu, if I may interrupt you for a while.
Yeah.
Dr. C.A. Rajkumar Adukia sir has joined the meeting.
Okay. Yeah.
If we can give some time to sir, he will address the gathering, sir.
Yeah, fine. Please, sir, please proceed. Please.
Can you please switch off?
Ravi Kishore, I am enjoying what he's saying. You know, in the learning,
Yeah.
even if 5 minutes we listen something, I can see that construction of complex services and the way Ramakrishna Sanguji is explaining, it's amazing, mind-blowing.
Sir, Sangu Ramakrishna ji is an expert in indirect taxes, sir, especially previously with VAT and service tax and now with the GST. He is one of the sought after speaker in South India, sir. So with your permission, I will ask Ramakrishna ji to continue for another 5 minutes.
Yeah, thank you. Thank you,
sir. Thank you, sir.
Thank you. I'll just complete this slide and give it back.
Yeah.
So at least 80% of the total value of the inputs and input services must be purchased from registered dealers only. In case of default of this, that is any shortfall, that shortfall will attract 18% GST with a twist that if that inputs that you bought which fallen short of is relating to cement, then the rate of tax will be 28% instead of 18%. So any other inputs and input services, any other inputs and input services, the builder will face the consequence of 18% GST under reverse charge mechanism. In case it is a cement, 28% reverse charge mechanism, the builder has to pay. And one more difference is that in case of other inputs and input services, on the shortfall, the GST is to be paid under reverse charge mechanism by 30th June of the next financial year. But you have time for this entire 22-23 financial year shortfall. You can compute the shortfall at the end of the financial year and you can pay by June of the next financial year. But for cement shortfall, you have to pay the 28% GST under reverse charge mechanism on monthly basis. This month you purchased cement from unregistered dealer worth 10 lakhs into 28%. Next month, while filing GST or 3B, you have to disclose and pay. That is the distinction between the cement and others. Coming to capital goods, you may ask a question, sir, here it is talking only about inputs and capital goods. I mean, inputs and inputs services. That means I can buy capital goods from unregistered dealers? The answer is no. Notification number 6/19. It says capital goods without any limit must be procured from registered dealers only. If you have not procured the capital goods from registered dealers, there is nothing like calculating shortfall and all. On the total value of the capital goods that you have procured from unregistered dealers, you have to pay GST under reverse charge mechanism. Okay, one point, and I will stop at this juncture, is that all these payments that you are making, input tax payments, shortfall payments, 18%, etc., please be remembered that they are not entitled to claim ITC of that payment. Because under this scheme, there is no concept called input tax credit. So therefore, you are paying, you are making a default, you are not following a condition, you are paying the GST under reverse charge mechanism, and you are adding to your cost of construction because that credit is not eligible for claiming ITC. Okay, we'll continue in a short while. Ravikishore Garu, you can please take it over.
Yes, sir. Thank you.
Thank you, sir. Thank you very much.
Sir, please switch off the PPT presentation, sir. Ramakrishna Garu.
Yes.
Over to you, GS sir.
Sir, thank you, sir. Thank you very much. Sir, ping change, sir. Andarni.
Yeah.
Good evening, once again, one and all. Thank you very much. Thank you, Aditya sir, for gracing the occasion. We have been waiting for you since 2 days, since last 2 days. I understand that. Friends, respected Central Council member, CA Dr. Rajkumar Satyanarayana Adukia, Chairman CPE Committee, Chief Guest of the Day, a stalwart in the profession, leader by nature, walking encyclopedia of CA, author and a teacher, a mentor. A hearty welcome to this VCM, sir. Sir, I request Dr. Ravikishore sir to introduce to the all our members.
Yeah, thank you, GS Garu, for that opportunity.
Only in 1 or 2 minutes.
Yes, sir, definitely, yes, sir.
Sir, it is 11 pages, sir. You have to give us time.
you are a known person to everyone, sir. You are a great contributor. We will be more than happy to say a few words about you, sir.
Thank you.
CA Dr. Rajkumar Satyanarayana Adukia ji is a global life and business transformation guru. He is an author of 300+ books. His mission is to transform the CA profession. He wants to make every citizen economically powerful and our country, India, most powerful nation of the world. He has a passion to make every CA member and every student a speaker and also a writer. He wants to see all the students and the members to be writers and speakers. He is the author of more than 300 books. He is a global business, professional growth and motivational coach. He is passionate to make anyone speaker, writer, acquiring new knowledge, professional qualifications, growth in business and promotion as CEO. He was member of IFAC PIB committee during 2001 to 2004, a term of 3 years. He was a member of IFRS SME IZ London for the term 2018 to 2020. He was also on the board of directors of SBI Mutual Fund and Bank of India Mutual Fund. He is a global mediator and international arbitrator. He has done many courses, including honors in BCom, MCom, FCA, FCS, FCMA, LLB, LLM, Diploma in CG, MBA, Diploma in IFRS from UK, Diploma in Criminology, PhD, Mediation, IP, MBF, Diploma in HRM, Diploma in Cyber Law. He has done over 20+ certificate courses and he has done some 75+ self-development courses. He was a student of MA Psychology, MA Economics and also PGD Crime Investigation and also a registered valuer. He is a ranker during his study days. In a CI Inter, he was the first ranker. In final, he is the 6th rank holder. In CMA, he is the 3rd rank holder. At Mumbai University, he was the 5th rank holder. And these are some of the ranks which I have mentioned among others. He was the chairman of Western India Regional Council of ICAI during the year 1997. He was Central Council member from 1998 to 2016, and now from 2022 onwards. This is his fourth term at the council. Friends, apart from this, he has done courses on winner, time management, stress management, and also he has mastered programs on Siddha, Samadhi Yoga, Silva mind control, alternative therapy, think and grow rich, art of living, Reiki. And also he was awarded with many awards like GG Boy Cup for proficiency and character, state trainer by the Indian Junior Chamber, Rajasthan Sri by Rajasthan Udghosh, a noted social organization of Rajasthan, several other awards as a successful leader in various fields. National Book Honors Award during 2018. CA Dr. Adukia continuously endeavors to help the clients achieve the desired results through customized and innovative solutions.
Sir, can I start addressing?
Which involve only two lines, sir.
Thank you.
It involves focusing on exploring opportunities and leveraging them to enhance the growth and expansion of his clients. Sharing the knowledge is enhancing the knowledge. CA Dr. Adukia encourages the precise energies in research, training, seminars, and books writing in the field. What do you, sir?
Thank you. Good evening, all colleagues, respected friends. I see 201 participants on Zoom and 12, dynamic, dedicated chairpersons of, enthusiastic branches of Andhra Pradesh. I see CA Srita Sirin Gadam from Vijayawada branch, Medha Nagraj, Anandpur branch, B. Bhargavi from Guntur branch, G. Gopal Rao, Kadapa branch, CVN G. Gangaram from Kakinada branch, K. Pinendra Rao, Kurnool branch, Venkat Madhuri Tigela, Nellore branch, Ranga Nayak, Kulur, Ongole branch, Kala Satyaraju, Raj Mahendravaram branch, Narsimullu Tirupati branch, Vasudeva Murthy from Visakhapatnam branch, and V. Ravi Kiran from West Godavari district branch. What is my passion is that each member of Andhra Pradesh state become a global practitioner. And if they are in job, they become CEO, not CFO. CFO may be one ladder to reach CEO. And all these things first happen in the mind and then in the reality. The location and the place from where we are working is not at all relevant. And I want to prove this, those who want to excel. I want challenge from those, participants who are listening me, 200 of them, that, sir, we want to become a global practitioner, how we can do, how we can use social media. We'll have some sessions together for a week or 10 days. We spend 30 minutes or 45 minutes every day. How social media, where we become a thought leader, we become a speaker, writer. Institute gives 500 rupees per page to write. I request Sangu Ramakrishnan ji, you must write a book on GST. 200 pages written will give 1 lakh, plus it becomes an audit evidence to tell the world that I am an expert. There can't be a better evidence then a written document or a document on social media, on a blog, on a website, and no violation of code of ethics happens. There are 3 clauses in the first schedule to the CA Act, clause 5, clause 6, and clause 7, where clause 5 talks about securing the work, clause 6 talks about soliciting the work, and clause 7 talks about advertising the work. Now work comes to us. All my work, I started my practice on 1st July 84. I qualified in May 83 exam. And this is my 7th term. I was there for 6th term, 98 to 2016. And then I decided, my larger goal is to be the Prime Minister of the country. So I thought, let me go to the institute, study, and I mean it. When I'm saying it, it is not a wish list. And therefore, I'm trying to study each state, each district, each tehsil, what can be done in those states. And we are trying to have a chapter. We will be writing to you chapter in each district, because chapter formation requires 25 members. Group formation requires 7 members. And for chapters, there is a yearly grant also of 25,000, because study circle, chapter, and groups are the ground to learn. And I'm so happy with the annual remittance scheme, ARS, because that facilitates learning. You make once a payment, and then we keep on learning. Like in real estate, whenever audit comes, like, when before VAT, there was a state sales tax. VAT first time in 2005 talked about audit. Then chartered accountant woke up. Yes, there is an audit. Because we wake up when there is an accounting and there is an audit. See, income tax, we interpret comma, full stop, inclusive definition, exclusive definition. We are the biggest interpreter, much interpreter, with due respect to the advocates. I have also practiced, when I was not part of council for 4 years as an advocate also. And I have done my LLM in Constitution. But I think this interpretation skill of law is taught us when we read income tax, and now with GST more. Perhaps GST requires more interpretation skills than perhaps income tax. And the impact of money is also more, 18% on the gross amount. Perhaps we don't make that much profit in a whole transaction, the size of the GST which is there. Now, today is the 3rd day, and the real estate sector, I'll share a Telegram group link. We have created a Telegram group for real estate sector. That way we want to create for each of the major law. So each one of us can do a lot of work. I'll request the organizers to make me co-host. So because I want to, I'm already a co-host. So I want to share some of the slides of my PPT to show what are the opportunities in the real estate sector. And what happens when initial days when I wanted to learn, I take up a topic where I do not know anything. And I mean it when I'm saying I take up a topic 2 months in advance, 3 months in advance, and I prepare on that. And it's an amazing learning. Similarly, I have a backup. I select an expert as a co-speaker. So I travel with that. So during travel time, we learn, we discuss when there is a time. So please accept speaking opportunities, because the travel is borne by the organizers, stay is borne by the organizers. When I was not in the council, I used to write to the international organizations. I have traveled to Orlando at the coast of Indian Institute of Internal Auditors, first class business ticket, 7-star hotel stay, similarly Dubai. So this becomes, an opportunity to learn and to create an evidence that you are an expert. Now, RERA, I consider 2% of the real estate opportunities, because it is one law which gives an opportunity to settle the dispute or to make the claim. And the opportunity is both promoter and to the buyer of the real estate. And it is not house, it may be an office building, it may be a plot. Now, what I consider is, now Andhra Pradesh is a coastal state, 7 coastal regions are there. And the conversion of agriculture and the stake is high, because any piece of land or any house will cost 5 lakh, 10 lakh, depending on the area. So agriculture to non-agriculture, the mortgage, development of the property, approval from various departments, compliance of laws, including labor law, advisors to buyers before investing. Suppose somebody invests in a a private limited company. By transfer of shares, we are transferring the property. So we save stamp duty, we save capital gain tax. Then investment outside India, there is something called LRS, Liberalized Remittance Scheme, where $250,000 US can be remitted from 1st April to 31st March by every individual. So it is a sizable amount, 2 crore or above. So, or similarly, those who want to invest in India, various NRIs, and this social media will get you a client. I can guarantee each of the participants, if they want to, within 1 month, or maybe if we are lucky, within a week, you will get a client. On my social media, you will see the posting on real estate sector. I started from today, because when I started doing RERA Day program, I started preparing for AP real estate, and like that in all 28 states, we will have this program, because 1st May was RERA Day. So real estate program in every state we will have, 8 union territories. Similarly, other laws. So income tax and other compliances. The advisory for mediation, due diligence, drafting of documents. See, sometimes we feel it is an advocate's field. No, see, the right of an advocate is to appear in the court. Tribunal is not a court. It is a district court, magistrate court, city courts. They are the courts. Company secretary's exclusive right is to do secretarial audit. Cost accountant exclusive right is to do cost audit. Our exclusive right, chartered accountant, is to do financial audit wherever the law provides, Companies Act, cooperative law. So drafting we can do far, far better because of our knowledge on income tax, GST, other laws. And today's drafting compared to 30 years back, 50 years back, today's drafting is a simple English drafting. What both sides can understand, the buyer and seller can understand. See, take for an example, Transfer of Property Act 1882. and the Indian Easement Act 1882. Now, Transfer of Property Act covers 7 types of transactions. I have remembered accounting standard, AS में लेगा, Hindi word lega. So A is by transfer by act of the parties. S is by sale of the parties. M is mortgage. L is leases, lega mein. E is exchange. Gift. So gift is covered by Transfer of Property Act, and it is a misnomer that TP is for immovable property. TP is for both movable and immovable property. Now in lease, there is a possession to the lessee. In the easement, leave and license agreement, it is a right to use. The possession is not with the lessee. So from the angle of lessor, from the angle of standpoint of owner, it is better to have a leave and license agreement rather than lease agreement. So things like that, the title deed, conveyance deed, mortgage deed, sale deed, the stamp duty is another area where we can specialize and do planning. Because stamp duty varies, from state to state. It is a state subject under the constitution. Real estate is also a state subject because the state is the owner of the land, which are not privately owned land. Then RERA, appearance before Real Estate Appellate Tribunal. We had RERA member addressing our seminar. I think Mr. Sambasiv Rao.
Chandu Sambasiv Rao, sir.
Yeah, Honorable Chandu Sambasiv Rao and Abhishek addressed on income tax, Abhishek Moodley. Valuation of real estate is again can be done, property management, leasing consultant, funding in the real estate sector. There is something called Real Estate Investment Trust, which is like a mutual fund, and Real Estate Infrastructure Fund. I see a hand raised by one of the participants. Sir, would you like to say something?
No, sir. They're marking the attendance by placing their name and number.
Okay.
Go ahead, sir.
Yeah. And various documents we can create, the certificates we can give. Power of attorney can be created by us. Tenancy agreement. So, and it's a very interesting subject to practice. Apart from this, I just want to give a glimpse of certain global areas of practice and certain non-traditional areas of practice. I consider 4 areas as traditional areas, and those are accounting, auditing, direct tax, and indirect tax. Now, apart from these, all areas are non-traditional areas. Now, we must look at certain areas which are non-traditional and which are global. So like in a global area of practice, I have made a list of 21 areas, 23 areas. So the internal control, we can do the whole 192 countries, including India. The forensic services, the risk management, human resources management is another mind-blowing area. Now there is, there is a rule called 20-80, 80-20 rules. You make a list tomorrow of our client, 20% of client, take only 20% of our time and give 80% fees. and remaining bucket, 80% of client, take 80% of our time. They will phone twice in a day and give only 20% of the fees. Now, for a professional, time is a most important resource. So if we leave this 80% of the client who give 20% revenue, we will have 80% more time to learn a subject, to think on who can be our client. The cyber security is going to be a digital area. Is this webinar, we are able to connect all of us. Otherwise, we would have commuted every day 4 hours, 3 hours to attend a seminar. The e-commerce, startups, global funding, insolvency and bankruptcy, drafting of business document itself can be a very big area. Outsourcing, IFRS, and each country. So Luca Pacioli in 1494, he created accounting in 1/4 of the page. He said every business transaction will have 2 sides, 2 effects. And all those can be divided into 3 parts, personal, real, nominal. And then he made the rules for each of them. So any IFRS, any Ind AS is so simple to understand. Anti-money laundering, competition laws, corporate governance, CSR, climate change mitigation, international trade, industry-specific specialization, ADR, arbitration and mediation, valuation services, IPR, global import-export services, self-development coach. Like I call myself a global growth coach and personal coach. I'll just see if there are some questions in the chat box. I request participants to put any questions, whatever it comes to their mind, anything which you feel the institute should do, because I am a council member, and then I will just take few minutes to talk about other non-traditional areas, which I call country-specific area. Earlier, what I talked, 23 areas are also non-traditional areas, global areas. But other areas are like, there are 30 plus tribunals where CA is allowed. FEMA, PMLA, Cyber Appellate Tribunal, Green Tribunal. So we can be a tribunal specialist. Then MSME specialist, real estate, merger amalgamation, NGO practice, recovery mechanism, labor law compliance. Labor law again is a state subject. PMLA, Benami, cooperative sector is a state subject. Succession laws, Hindu laws, NBFC, money lender, chit fund, Nidhi company. No, for one NBFC, the registration fees which a consultant can charge is 15 lakhs to 20 lakhs, depending on the need of the client. Atmanirbhar Bharat project, social media consultancy, subsidies, coaching to the students, finance for non-finance, virtual legal counsel, CFO, agriculture is one area, sustainable economic development, opportunities in company law, corporate law, liquidation. So like this, I would like each one of you to connect with me if you are interested in this, any of these areas of practice. And it will be my duty to see that you become expert in that. I see a question, a separate guidance for accounting for real estate transactions. Yes, real estate transactions is covered under revenue transactions. We can have a separate guidance note, like how a developer or a builder should do an accounting.
My dear members, Rajkumar sir is requesting to raise your hand and a query or something like that. He will ready to address the same. Sir is ready to address the same. So you can raise a hand, or you can unmute yourselves, because I made I granted permission to each and everyone to unmute themselves. They can ask question directly.
That is Madhuri from Nellore branch of SIRC.
My number, my email.
Madhuri sir,
Yes,
Madhuri ma'am, tell me
yes.
ma'am. Madhuri ma'am, tell me. Yeah.
Good evening, sir. This is Madhuri from Nellore branch.
He is the chairman of Nellore branch.
Yeah. I see the
Agree.
chairman. I want to recognize them. At Hyderabad also, I was trying to meet each one of them. Yes, Madhuri.
Sure, sir. It's general request, sir. Even Nellore branch is interested in hosting a program like this in the next month regarding MSMEs, sir.
Okay.
Most your support. MSMEs, right from their registrations to compliances and everything, sir.
What we want an online program.
Yes, sir.
Your branch can take a lead and we can do for the whole AP.
Yes, sir. Yes, sir. Yes, sir. Yes.
So registration is on Udyam simplest. Within a minute, one will get. And what are the advantages? Suppose I am a MSME, falls in, and I have to receive from somebody, say 1 crore. Sale was made, say 2 years back. Today I do a registration. I will be able to claim under MSME Act. There is a separate recovery mechanism under MSME. Plus, there are marketing facilities available. Government has to buy 25% from only micro and small.
Yeah.
And there is a GM, government e-market. We are also MSME, because MSME is on the basis of the criteria of investment and turnover. So we chartered accountant also should register ourselves as a MSME, and then registered on the portal, GEM portal, to provide services to the government on a priority basis. So we will do that. We will plan out.
Thank you, sir. Thank you very much. So,
there is a query whether there is a book on MSME. Yes, Sridhar, you asked. There is a book by Taxman. There is a book by Bharat Law House. So in the market, books are available. Plus from website, we learn more. I put up my video to look at the books in my library on MSME. I would have shown that there are multiple books available, and there are no dearth of knowledge. See, there is a knowledge explosion. You type on Google. Let me, since there are so many queries coming. Give me a minute, please.
Definitely, we can see this a lot more books in the Google, sir. And I request Venkata Krishna Garu, you raised your hands. What is the meaning of first occupancy? That's what his question, sir.
This is with regard to the GST, sir. Maybe at a later point of time, Sanghu Ramakrishna sir will address his question.
Okay. Anyone else?
All of you are free to unmute yourself and you can speak.
Sir, regarding hello.
Yes,
yeah.
Sir, I am Panchakshari. Regarding the delay in making the payment to the MSME vendors, there is a provision to make 12.75% interest provision. Whether that interest is allowable as an expenditure?
No, that interest is not allowed as an expenditure.
But in
fraud, it is not 4.75. It is 3 times the bank
3 times of the yes, sir, benchmark rate. RBI compounding monthly.
Yes.
But regarding this one, how to shown it in the financials the same.
No, that is not allowable under MSME Act, which is a very small act. It is not allowable. Perhaps we will discuss this. We will shortly plan, what Madhuri Madam wanted program on this. We can plan out, say, in 2 weeks or 3 weeks time.
Sir, Adukia, sir.
See, the delayed interest on amount which is not paid to micro and small. This is applicable only to micro and small.
Yes, sir.
Then that is not allowable, because that is sort of a hint given to the buyer of the goods from micro and small that please make the payment in time.
Yeah, sir, Rajkumar, sir,
Yes.
through you, we have a request to the council, sir.
Yes.
As far as membership programs are concerned, we are comfortable and we have some data of members to reach them to inform about the branch activities, sir. But as far as the student activities are concerned, we are deprived of this data of the students, wherein we are unable to reach out the students. Actually, what now we are doing is, we are having the database of those persons or those students who have pursued the orientation, GMCS, ITT, etc. with us. So we were in a position to only to reach out to those students with regard to the programs conducted by the branch, sir. But as far as the other students who are pursuing in and around our area, we do not know about them and we do not have any means to reach out to them, sir. This is an issue.
There is a facility available. See, any communication which we want to send to the students, any email, any program, the institute sends that communication within, say, 1 day's time, 24 hours. You can write an email to me with this effect.
Yes, sir.
I put my email ID. It may be available on ICAI website also.
Yes, sir.
Any other matter?
Is MSME applicable to small service providers? Mr. Srinivas Murthy is asking, sir.
100%. Therefore, I took CA. Even CA it is available. Say I am a sole proprietor. I can register under MSME. I will fall in the micro category. So say those who are housekeeping, they are eligible. 27th June is an International MSME Day, and we are planning a very big event in all states. No, there is a separate MSME and startup committee, and each state has many policies for MSME and startup. So this is a very good area of practice. Provisions applies between two MSMEs also. See, you can make a general suggestion. Otherwise, this session should not convert into MS.
Sir, all these doubts regarding MSME, we can plan in the next session, sir.
Next
Let us
session,
reserve
next
them.
program.
So any
Yes.
other things
Let us
to be
reserve them
conveyed?
for next sessions.
Yeah, general questions you should ask, general suggestions.
Even our speaker, Sangu Ramakrishnan sir, also will be waiting for this.
Yeah, I know. It's 7:15 and
No problem.
No, you will have some time because he has already spoken more than 2 hours. So from 5 o'clock, he's go on talking. There is no problem, absolutely.
and my
And any other member having any clarification, I request you to kindly reach to our CPE committee chair, Adukia sir.
There is one query which has been put about 1010 BD form. You can email me. I do not practice in charitable trust, but we can look into that 10 BD form. Any general, I think we can carry on with the session because more queries are coming, on MSME, income tax, and other things. And I welcome any time you write, and please speak out your mind. Don't keep reserve that whether you should say that or not. When we write to ICAI, it is within home. It is our home. It is our own organization. So unless different suggestion comes, bold suggestion comes, there won't be any improvement.
Sir, one of the participants want to know whether there is any guidance note on a real estate transaction.
Yes, there is a publication of the ICAI on real estate transaction accounting. And let me see, because changes have taken in the law. See, earlier we had proportionate method and complete, like in the contract, there are two methods. Complete contract method, where we recognize the profit on the completion of the contract, and proportionate completion method. So there is a change in the accounting standard on this. So I'll check up. See, these queries gives a ground to learn more.
Sir, a guidance note on tax audit is a long pending issue, sir.
Yeah,
Updated.
just now the chairman had put me back. They've revised the guidance note. What I will do, he was to send to me, Mr. CV Chitle. I'll share the first draft. They've already made a revision on that. So shortly it should be out.
Rajkumar,
Yes, sir. So GSR garu.
Any other?
Monday friend
GSR garu. Please unmute and speak, sir.
Unmute and speak.
Adukya sir, all the chairmen who are there on the dashboard, sir. Vasudev Murthy garu from Visakhapatnam, Gangaram garu from this Kakinada, and Ravi Kiran from West Godavari branch, and Sachiraj garu from Rajamahendravaram, and two madams, even Bhargavi is also there, but she could not able to open the video, sir. So that is the thing, sir.
I'm thrilled to see the enthusiasm. I said in Hyderabad also, ki South India, all South states, they are the Harvard of the world. They are the Oxford and Cambridge of the UK. And they are the knowledge storehouse. And the enthusiasm to do the programs for the members is amazing to see. So I'm thankful to all chairpersons and thankful to Mr. Srinivas Rao for taking the lead. Thanks to Madam Sirin to take the lead, and of course my council colleague Prasanna Kumar and SIRC chairman T. China Mastan, for taking the lead, and we will do more programs at the state level. So, and maybe at a national level, but state level, so that participants can have more interaction. We will plan this MSME immediately, whatever date Bhargavi madam you want, we will do that. Or it was Madhuri ma'am, whoever made a request. So I will accept
one more request from my side, sir, from Kakinada Gangaram.
Yes, please.
We already met at orientation programs. Sir, Caro is also an important topic for us. If you can provide us some light on that.
See, Caro.
Latest developments in the Caro.
Latest development in Caro, like I'm not remembering everything, but Caro, see, I consider Caro very simple. Whatever they say, like, one of the clauses about stock, physical, earlier Caro, they have expanded the reporting requirement.
Definitely, sir. Definitely. Yes.
The Schedule 3 amendments have also taken place, from 1st April 2021. So when we are doing the 21-22 audit, compliance of new Schedule 3.
Yeah.
Caro, we recently did a webinar. Maybe at a AP level, if you want, we can do again a webinar on
Yes, sir. Please.
Caro and Schedule 3 if all the 12 chairmen, chairpersons agree.
If you combined with the MSME with the Caro, that will be beneficial to us, sir.
Yeah, because in the interactive webinar, no, more questions, like we can discuss like a study circle, though there are 200 participants, but we can discuss among ourselves. Any questions can be asked. So maybe immediately we can do in another 3-4 days. Somebody need to write me the email, we will create a program.
Sure, sir. Thank you.
Nowadays, webinar is so easy. At the click of the button, the program can be. Anything else? Otherwise,
thank you, sir. Thank you for supporting us.
Thank you very much, sir. The day before yesterday, Prasanna ji was also referring that this AP state level conference issue has propped up in the CPE committee also. Full credit to you, sir, for initiating such a type of program. And day before yesterday, Nellore branch chairperson was saying that each month, all the branches in Andhra Pradesh should come together to host one such kind of a program. And also some of us have opined that each of the branch will take as the lead branch in each of the months, sir. So this full credit of state level programs will go to you, sir. And Prasanna ji was referring that by this initiation, you were also planning with other states also, has been told by him, sir.
Yes, yes.
Day before yesterday in the CPE committee meeting, this issue has been raised. That's what he was referring to the day before yesterday when he was in our program, sir.
Yes.
So we should thank you very much for this sort of a unique idea which you have put forth as far as the CPE programs are concerned. Over to you, GSR Garu. Please unmute.
Sir, one more request.
I make a request that we have 12 branches. So tomorrow itself, you plan out 12 programs.
Yes, sir.
Lead one of the branch for every month, like, MSME is taken. So like that, you look at my PPT, select the subject, like 21 global opportunities, 23. So out of 45 subjects, select 12 subjects or maybe 24 subjects. We can do 24 webinars. Thank you.
Thank you, sir. Thank you very much, sir. One more request.
Thank you, sir. Thank you very much. Without wasting much of our time, we'll hand over the proceedings to the resource person. Ramakrishna Garu, kindly take it.
Thank you. I like it.
Rajkumar sir, I'm very glad to hear you, sir. This is the first time I'm listening to you. Really inspirational. Thank you very much, sir. I'm glad.
Thank you.
Thank you, sir.
Thank you, Rajkumar Garu.
So we'll coming back to this. Yeah, we were discussing that 80% of the total value of the inputs and input services must be procured from registered dealers. Somebody has raised a question whether where I buy goods from a composite tax dealer, whether it amounts to purchases from registered dealers. The answer is yes. A composite dealer is a dealer who is registered with the GST authorities. Therefore, while computing the 80% limit, even the purchases of goods or services from composite dealers also eligible as purchases from registered dealers. Next one. Yeah. No ITC shall be available, as we discussed just a few minutes ago, that under the new scheme, there is no ITC available for the builder. But then whether we need to maintain the records of input tax credit, is it mandatory? The answer is yes. Many people are simply adding it to the cost and putting in the stock ledgers or asset ledgers. But the question is that whether the input tax that is foregone because of the scheme, that is the purchase of goods from registered dealers on payment of GST, whether it needs to be or required to be reported in the portal or somewhere to the department, the answer is the 3/19 says yes, it should be reported in the monthly GSTR 3B returns under the head ineligible input tax credit. It is mandatory. So whatever input tax, or that is the tax that you have paid on purchase of goods and services during a particular month, in that particular month GSTR 3B, it should be reported. Many people are missing, please check it out. And capital goods purchased from unregistered dealers, yes, it is very much taxable under reverse charge mechanism by the builder under 13/2017 RCM notification. Okay, now coming to the next leg of discussion, joint development agreements and landowner share. We know what is joint development agreement, and the builder is liable to pay GST on flats constructed and handed over to the landowners, irrespective of when the flats are being handed over to the landowner, whether it is before OC or after OC, it is not relevant. Liability shall be in the hands of the builder. See, many people are asking, sir, my landowner is not paying me the GST. What can I do? Whether can I say that as a reason and avoid the payment of GST? The answer is no. The responsibility to pay the GST on the landowner share is with the builder. If your landowner is not paying you the GST, it will be a civil dispute, and you have, being an indirect tax, you have every right to recover the tax from your landowner. You can go ahead and file a civil suit in the court of law and recover it. Next one. The next level, the next slide deals about taxability of transfer of development rights. So far, we are discussing from the builder point of view. Builder received development rights, builder constructed the flats, builder giving the landowner share to landowner, builder selling his flats before occupancy certificate, builder selling his flats after occupancy certificate, complying with the various conditions of 80%, 20%, etc., etc., etc. Now, what is the role of the landowner? How he is being dealt with by the 3/2019. See, transfer of development rights, that is, it is a service being provided by the landowner to the builder by means of a JDA. He is giving rights to the builder. So, whether it is taxable, we know, we just read the supply definition. Supply includes all forms of supply, barter, exchange, etc., etc., etc. It will very much fit into the definition of the supply. Whether it is taxable, it is nowhere specifically mentioned, but if you recollect notification number 4/2018, dated 25th January 18, where it doesn't say that transfer of development rights are taxable. It doesn't say that the transfer of development rights are taxable, but it says when the tax thereon is to be paid by the landowner. That means they are already under the assumption that it is taxable. Now they just clarified what is the time of supply. They said the date of getting the completion certificate is the time of supply, and accordingly transfer of development rights, GST shall be discharged. So now that is very clear, even with the 3/2019, that transfer of development rights by the landowner to the builder is a taxable service and shall be subjected to GST. GST is to be paid. The next question is, here, the next 2-3 slides will be important, as many people ask these questions more frequently to me at various forums. Sir, you said, or the notification says that flats sold after OC are exempt. Is it true? Is it true? Is it real? Is it real that I need not pay? I'm talking about builder share, that when I'm selling a particular flat after occupancy certificate, I'm not liable to pay GST. Now let us see, let us test whether it is true. Is it real that I need not pay GST on my flat sold after OC? Now, having said that transfer of development rights are taxable, who is the service provider? The service provider is the landowner. He is transferring the development rights to the builder. So therefore, he is the person who is liable to pay GST. Point number one. Point number two. Point number two, 12/2017 amended by 4/19 notification provides exemption for transfer of development rights services provided if the development rights are transferred to a builder for construction of residential apartments. On the other hand, if the transfer of development rights are for construction of commercial apartments, whether partly or wholly, it is fully taxable. Therefore, if a landowner transfers the development rights to a builder for construction of residential apartments, 100% residential apartment, no commercial area, even a single square feet carpet area is not commercial. In that case, that is fully exempted. Okay. In other words, we can say that following is the quantum of exemption with respect to the transfer of development rights. I'm going back and repeating. Transfer of development rights is development rights transferred by the landowner to the builder in consideration of some flats or cash, whatever, or a combination. Therefore, service provider is landowner, service receiver is builder. Okay. Now, we are saying the transfer of development rights is a taxable service, but again we are saying 4/19, it is exempted provided it is for construction of residential apartment. Then what is the quantum of exemption? It's very simple. You find out the GST payable on TDR. What is the amount of GST payable on TDR? What is the rate of tax applicable for TDR? The rate of tax applicable for TDR is 18%. It is not construction service to apply 1%, 5% or whatever other or abatements, etc. There is nothing like that. It's straight away 18%. Okay, rate of tax is 18%. Now, how to compute the GST payable on transfer of development rights? The same notification says the value of the TDR, where the transfer of development rights were transferred in consideration for an apartments in kind, then or cash, both, then the value of the cash component plus the value of the apartments that he is going to get from the builder in exchange for the development rights. Now, what is the value of the apartments? The value of the similar apartments sold by the builder to outsider nearest to the joint development agreement. Let me simplify this. In our example, 40 flats belong to the landowner. 60 flats belong to the builder. Now you take 40 flats. Okay. Now how to value these 40 flats? The value of the 40 flats for computing TDR value is equal to, now take out of the 60 flats of builder share, what is the first flat sold to outsider? Take that value as the basis. Similar flat, value of the similar flat means the flats which are similar to the flats which are being handed over to the landowner. Okay. So take that, multiply into 40, that is the value of the TDR. Multiply with 18%, that is the GST payable and TDR. Now what is the exemption? This GST payable and TDR into carpet area of residential apartments divided by total carpet area of residential plus commercial apartments. So it's a very logical formula. He is saying if any part of the building is commercial, then I will restrict the exemption only to the extent of residential portion. So you take the carpet area of the residential apartment and claim the exemption. Okay, fine. Now, exemption is granted. Okay, very good. Now, builder, the next condition for continuation of this exemption is that this is where we are testing. Many people are going wrong here. Many clients are going wrong here. They are all under the impression that flats sold after OC, they need not pay GST. Flats sold after OC, they need not pay GST. That is the impression. Now let us see whether it is true. Now, in the case of JDA, we just now discussed the development rights are exempted. But the condition is that there should not be any residential apartment left remain unbooked as on the date of completion certificate. You understood this particular point? I will put it in another way. It says all the flats should have been booked as on the date of completion certificate to get the exemption. So therefore, if there are any flats remain unbooked, it's not sold, booked. It is enough if it is booked. What is booked? There is a definition. I will come to that later. But he is saying there should not be any residential apartment which remain unbooked as on date of CC. What if out of my 60 flats, some 10 flats remain unbooked as on the date of OC? So I could sell only 50 flats. 10 flats I could not sell. Okay, if that is the case, the exemption granted earlier will be withdrawn to the extent of these 10 flats. Hope I'm making it clear that transfer of development rights are taxable. 1. Transfer of development rights are exempted if it is for residential apartments. 2. And then 3. Even if the transfer of development rights are for construction of residential apartments, the residential apartments so constructed must be sold as on the date of completion certificate. If all the residential flats in the building are not sold as on the date of the completion certificate, then exemption will be withdrawn proportionately to the extent of the flats which are not sold as on the date of OC. For that, how to compute the tax? How much of the exemption will be withdrawn? For that, you have to take the exemption that you claimed earlier, thinking that you will satisfy everything. You bring that, okay, into carpet area of the residential apartments which remain unbooked by carpet area of the residential apartments. Formulas you can read from the notification also. I will explain what is that they are saying. Now you have taken for 60 flats, 100 flats, saying that for 100 flats, residential apartments, you claimed exemption, right? Now you are saying, sir, 10 flats I am not sold before OC. Okay. For example, if TDR value into 18% comes to 1 crore, you claimed 1 crore exemption, right? This 1 crore exemption is for 100 residential apartments. Now you are saying, sir, I am not able to sell 10 flats. That means 10%, 10 by 100. So 1 crore into 10%, 10 lakhs, you have to pay. Who have to pay? Next question. Exemption is withdrawn. Wonderful. Okay. Next question is, first you said exempted. In this case, service provider is the landowner. Service receiver is the builder. Now you are saying, since you are not sold 10 flats as on the date of OC, exemption is withdrawn. Exemption is withdrawn to the extent of the 10 lakhs. When exemption is withdrawn to the extent of the 10 lakhs, that means tax is payable. That means when the tax is payable, who has to pay? Whether it is the service provider, the landowner, or it is the service receiver, the builder. For this, they amended 13/2017 and they said, dear builder, you pay the GST and reverse charge mechanism on transfer of development rights. So everything is in the hands of the builder only. Landowner was very safe. So now bring the test. Whether flats sold after OC are exempt from GST. Yes, right. Flats sold after OC are exempt from GST, but notification indirectly asking the builder to pay even on these 10 flats in the name of GST on transfer of development rights. Because once these 10 flats are not sold, proportionately you are liable to pay GST and transfer of development rights, which will be much, much more than your 1% or 5%. Therefore, all flats in apartments now, all the flats, landowner share plus builder share, whether sold after OC or before OC, directly or indirectly attracts GST. So please check in every project where JDA is involved, Joint Development Agreement is involved, your client has discharged on all the 100 flats GST, whether sold before OC or after OC. So only in a case where the land is owned by the builder, only in a case where the land is owned by the builder, only then he will get the benefit of exemption where the flats are sold after OC. Otherwise, if it is a JDA case, all flats will attract GST. In our example, 40 flats, landowner share under forward charge, 50 flats sold before OC under construction of complex service forward charge, balance 10 flats not sold before OC, taxable under transfer of development rights under reverse charge mechanism. Classification changes. Classification changes, but tax will come. You have to pay the tax, but classification changes. Okay, next one. Next one, when, as far as development rights and flats being given to the landowner is concerned, what is the time of supply? I said no in the previous slide, with few exceptions. Time of supply, few exceptions for real estate sector. These are the exceptions. Tax payable on flats handed over to the landowner for his share. Similarly, tax payable on transfer of development rights can be paid on or after the date of completion certificate. The building gets the completion certificate. Okay. Now, let me tell you one more interesting point before going to the plots. Next, only 3 more slides. We'll close it out. Next point. And many people are missing still. 5 years of GST is, sir, the builder has handed over 40 flats to the landowner. Okay. So for these 40 flats, the builder will charge GST on the landowner. Okay. The builder will raise tax invoice on the landowner. Okay, fine. Now, the landowner who got 40 flats from this project is in turn selling to his customers. is in turn selling to his customers, whether it is taxable. Whether it is taxable. The answer is 100% yes. He is now providing a service, a back-to-back construction of complex service to his customers as far as his 40 flats are concerned. So then is it not double taxation? Because on the same 40 flats, builder has already discharged the GST charged on the landowner. Now you are saying when the landowner in turn selling the flats to the outside customers, he is liable to pay. Yes, double taxation only. But this is the only case where in the entire new scheme, ITC benefit has been given to the landowner. In other words, the landowner can claim the ITC of GST charged by the builder with respect to the 40 flats. So therefore, we should advise the landowner to take GST registration by the time the builder raises the tax invoice on the landowner, so that by the time he gets the tax invoice from the builder, he will have GST number, he can take input tax credit. Okay, take the input tax credit, dear landowner, take the input tax credit. And when you are in turn selling, your flats to the outsiders, you pay GST and avail the ITC, that is the tax charged by the developer. Okay. Okay. One more point here. Sir, the landowner is selling the flats to his customers. There may be two scenarios. One, before OC, after OC. We said when the builder is handing over the flats to the landowner, OC is not required. OC not relevant. OC is not relevant. But when the landowner is selling the flats to outsiders, OC is relevant. The law says, if by the time the landowner is selling his flats to outsider, the building gets OC, that is exempted. Otherwise taxable. So let us further extend the example. Out of the 40 flats that he received, 40 lakhs ITC received, 20 flats sold before OC, he can use 20 lakhs ITC, reverse the 20 lakhs balance with respect to the flats which are sold after OC. Okay. So this is all about, okay, in a comprehensive manner, covering all aspects with respect to the construction of complex service, both in the hands of the builder and landowner. Now I'll go to the last topic of today's session, development of plots. This is the recent happening in the department. Now the department is seriously concentrating on this particular area, development of plots, that is layouts. Whether development of layouts are taxable. To answer this question, there is no specific provision, unlike construction of complex service, saying that development plots are taxable. But the general connotation in the trade and industry is that land is not subject to GST, therefore development of layouts are not subject to GST. But please go back to section 7, scope of supply, which says that supply includes all forms of supply such as sale, barter, exchange, etc., 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 for consideration by one person to another person. Can we fit this into there? Okay, we can fit this. Now we are running out of time to discuss more on this, but it can be fitted. And moreover, there are nowadays almost one advance ruling every week is coming on this particular subject, citing that or stating that or holding that development of layouts are taxable. Development of layouts are taxable. Especially Karnataka and Gujarat, there are, with strong reasoning, they have pronounced how and why this development of layouts are taxable. More particularly, JDA cases, joint development agreement cases, where one person takes the agricultural land or another raw land of another person, agrees to develop and agrees to share a part of it with the landowner. Even I strongly believe that GST will come, because he has given a land, the builder, the developer is developing the land and in turn giving developed land to the landowner in exchange for the raw land. So therefore there appears to be a service element between the landowner and the promoter, and therefore the services provided by way of development of land provided by the developer of the land to the landowner should be subjected to GST. Then what about plots sold out to outsiders? That is, out of the builder share, he is selling his share of plots to outsiders. Here the crux is that if the sale deed is entered after the layout gets completion certificate, it should not be chargeable to GST because development is already completed. After development, whatever sale is there, it becomes sale of land. It should not be taxable. But if plots are sold during construction, under construction, okay, until the date of sale deed, it should not be taxable, because until then the land is owned by the builder by way of power of attorney. Therefore, he is providing development service to himself. But once the land is sold to outsider in the middle of the development and sale deed is entered, and after that the development continues, that part should be subjected to GST as far as plots sold to outsiders is concerned. These are our views, but there are issues. What are the issues? Okay, if at all taxable, what is the valuation of transfer of development rights? Because if at all taxable, because now show cause notices also started issuing, especially in AP, Telangana, they have issued show cause notices to developers, promoters, asking to pay tax. In some cases, promoters agreed, but the valuation is the dispute. Promoter says the value of the land TDR should be the value at the time of JDA, entering into the JDA. Department says no, since development is the service, the TDA, for the purpose of TDR value, the value of the developed plot should be the valuation, should be the taxable value. There is a dispute between the trade and the department. Then classification of service. Department says it is a works contract service, no abatement, nothing. Okay, you pay 18% GST. And then what is the time of supply on the landowner share? Is it at the time of entering into the JDA or is it at the time of completion certificate? There is no clarity as that of construction of complex service, where there is a specific notification stating that the completion certificate shall be the time of supply. Now what department is thinking? Notices were out, left, right, center, they are issuing the show cause notices. Now what they are saying is development or plots are taxable, no doubt, and developer is liable to pay GST on landowner share. Developer shall be liable to pay GST on sale of plots of plots sold before OC. The services are classifiable as works contract service. Rate of tax shall be 18%. ITC can be claimed by the developer. Valuation shall be the value of the developed plots, fair market value in case of landowner share. Time of supply shall be the date of CC or handing over, whichever is earlier. So I have put forward all the arguments of the department. Okay, it's now to handle with your clients with regard to development of plots. Generally, client will tend to come and say, sir, I am not taxable, but you should caution him that department may come out with a show cause notice for his projects. Okay. Now with this, I'll open the floor for question and answer session.
I request anyone who has any doubts. We already opened that you can unmute yourself and you can ask the questions directly to the resource person.
Good evening, sir. This is Kondalra from Guntur.
Hi, sir.
Go ahead, sir.
This is regarding, as you said in your earlier slide, that TDR value.
Sir, PPT ko chapestar. Yeah.
Yes, sir.
Sir, this is regarding TDR value payable on RCM basis on unsold flats.
Yeah.
Just I want to get clarified. This 18% is get restricted to the 5% or 1% on the fair market value of the unsold flats.
Yes. It is
not
there in the
18%.
slide.
It
is there in the slide in the last line. However, the tax shall not be more than 1% or 5% of the tax payable as if they were sold before OC. And the valuation shall be the value of the last flat sold by the promoter immediately before the date of CC.
Okay. One more thing is just so many people are our professional fellow professionals also. Many of arguing. Is my understanding is this unsold RCM is applicable only unsold flats of the builder or developer. Is no way connected to the landowner share because the landowner we don't have any control on the landowner.
That is anyway taxable under forward charge mechanism. That is anyway taxable.
Anyway taxable, we have paid as a construction service.
Yes.
So this RCM is only applicable on
unsold flats.
Unsold flats of the builder.
Builder share.
And one more, the TDR sufficient to track the sale value.
Sir, I request everyone to kindly mute themselves.
Yeah, Kondalra.
Sir, is it correct to take the first sale value in the project as a TDR value? Suppose.
Yes. It is there. It is there in the notification.
There is no ISS. There is a misconception, and the department also even that Hyderabad GST they are not accepting, saying that whatever. Suppose after till 1 year there is no sales. Suppose one builder share they are not sold. Even after 1 year also or 2 years also they could not able to sell it. Is it correct to take after 2-3 years of JDA? That is the value of TDR. Actually, in service tax regime or substance of the valuation, value as on date of my JDA, that is the where I have decided to hand over my land, and that I know what is the value I am going to get it on that day. Is it correct to take the first sale even after 2-3 years? That is TDR.
Might be, maybe. And in some angles may be correct also, because the language used in the notification is the value of the similar flats sold by the builder nearest to the date of JDA.
Yes.
Okay, so whatever be the first flat sold, irrespective of when it is sold, technically speaking, leaving apart that time I could not sell this, etc. Whatever be the first flat selling price is there, that they will adopt that price for calculating the TDR value.
So even they cannot argue the latest value should be taken. That is the first sale, it's enough. Suppose as a developer, if I register one flat for the TDR, just practically what is going on, no big projects and all in Hyderabad, just they are registering one flat. After JDA, immediately they will register one flat. So that value will take it as a TDR value. For we are advising also, is it there is no risk at all?
No problem.
Lalit Shankar garu,
Okay, thank you.
Shankar garu.
Yeah.
Go ahead.
Sir, this is with regard to sale of developed plots.
Okay.
Generally, this sale will commence only after getting certificate of completion. Why? Because before selling of these flats, that's roads and everything has to be completed. Then only respective department will give a clearance. In such a case, can we take a stand that plots has been sold after completion, after receiving completion certificate, and GST need not be paid? Can we take
The
that?
sale deed date should follow the date of completion certificate date. Take exemption from GST.
Okay, sir. And my second doubt is, in case of sale of flats, ownership, let's say related to developed share of flats, in case of any flats which were left unsold as on date of certificate of completion, with regard to such plots, input is to be reversed.
See, under the new scheme you are asking?
No, sir, under old scheme.
Under the old scheme, yes, you have to reverse the ITC, because section 17 read with rule 42, inputs and input services used for providing exempt output services are not eligible. Therefore, you are liable to reverse the input tax accordingly.
And then owner share of flats, should we pay that input by cash, or it is?
No. As far as landowner share is concerned, you can very much use ITC and pay.
Okay.
Yeah.
Right, sir. Thank you.
Yeah. Most you are from
Vijayawada, sir.
Okay.
Nilesh, you can ask the question.
Hello,
sir. I have one doubt.
You are from, sir, Nilesh?
From Karnataka, sir.
Yeah. Tell me.
Some construction laborers are employers of the builder. The salary paid to them will be considered as URD inward supply.
No. That is not an input service. No. Services provided by employee to the employer in the course of the employment is a Schedule 3 item.
Okay. Thank you, sir.
Non-GST supply.
Sir, JVC, sir, you can ask the question.
hello,
Tell me, sir.
hello.
Go ahead, sir. Go ahead. It is audible.
Sir, this is with respect to the layout plan approval, sir. 40% of the entire piece of land has to be gifted to the local authority.
Yeah, okay.
It has a bearing on valuation with respect to development of plots. But we're just in the concluding the slides. Development of plots, because the third person, the builder or promoter, is taking over a piece of land from the landowner and is laying out LP, layout plan.
Yeah.
By giving 40% as a gift registration to the local authority.
What is the consideration for the landowner?
Balance of the remaining 60, he parting among themselves.
There? That means you are saying instead of developed land, they will get cash, huh?
Yes, sir, exactly.
What? Then it is very easy now, sir. They know the value. You pay GST.
My question is.
Yeah, Mr. Fanigaru.
Yes, my question.
Your question is when it is a cash, what is the GST angle?
My question is the amount of the land foregone, whether it has a bearing impact on the valuation with respect to GST taxability.
Yes, will be there. Well, ultimately, that is what is the underlying consideration. When valuation comes, they will take into account the land given, the return coming, everything. And if the whatever amount that they are sharing is approximates to the value of the TDR computed as just now discussed with earlier participant, then they will leave it. Otherwise, they will take into account the actual land dealings.
But one thing, sir, even before the development, the price per square yard remains unchanged while registering.
Sir, for that there are disputes, sir. Department is saying as far as plots is concerned, there will be a dispute. Department wants the per square yard rate after development, and the SSC says contention is that since JDA is entered long before, the value of the undeveloped land will be much lower than the developed land. So the value of the undeveloped land as per JDA at the time of JDA should be taken.
But one thing, sir, even
this dispute is not there for flats. Flats, it is very clear. Plots, there is no clarity.
For plots itself, even before the development, the rate existing before development is existing even after the development while registering, sir.
Wonderful, wonderful. Then there won't be any issue.
So that 40% we can straight away ignore while valuation.
Since you are giving it to the third party, ultimately we will see how much land is given by the landowner. You are saying some 1,000 square yards. Out of that, 4,000 square yards given to government. Why government you are giving freely?
For laying out the roads and drainage, etc., it has to be gifted to the local authority.
Okay, as per the JDA, what are the terms between the landowner and the developer? How much he has to give back?
Whatever is left over 60%, amongst that 60%, 80 and 20.
Okay, that should be taxable. In that 60%, whatever as per the agreement they is entitled to, that should be taxable.
So value of 60% only, 40% has to be ignored.
Obviously, he is not getting no in turn, that landowner. That 40% is not getting, so it should not be coming into the tax net.
Okay. Thank you, sir. Thank you very much.
Yeah. And some message queries are there. If GPA given on land, GPA is not taxable, then what is the value of service provided by the builder to the landowner in respect of 40 flats in our example? The value of the 40 flats will be 40 flats into value of the similar flats sold by the builder to the outsider nearest to the date of joint development agreement. In other words, take the list of sales made by the builder. Out of that, take the first flat sale. Okay. Let us say 50 lakhs, same flats, similar flats. Now 50 lakhs into 40 flats given to landowner. That should be the valuation into 1% or 5% depending upon the size of the flat. Salary paid for deputation of employee and GST is applicable. There are advanced rulings saying it is taxable, may be taxable, sir. Depends on so many facts. Government works recently for certain entities, like government entities. If it is a pakka central government, it is okay. But government entities also earlier there used to be 12% rate. Now it is revised to 18%. I think from 1st January. Please check the January notifications. Now, next question is, sir, what is the logic behind giving GST exemption for flats sold after OC? Because once OC is received, the building gets set to be completed and it becomes an immovable property, and sale of immovable property is not taxable under GST law. And sale before OC is deemed to be a service. Okay, sir. Next.
Thank you, sir. Thank you very much. A quick word from our host club chairman, host branch chairman.
Yes, sir. Yes.
Sir, can I have one last question?
Yes, sir.
Go ahead.
Sir, in your earlier slide, you said that 80-20 rule, input or input services used in construction activity. What is not used in construction activity, like finance cost, partners remuneration, all other things are those things are exempted from that 80-20 rule.
On that there won't be GST, no, sir.
There won't be GST, but department is saying we will take it as entire cost of the project. Cost of the project means these are all outside only, no? Wherever the GST is not applicable, that particular cost. So my understanding is they cannot ask GST invoice. So wherever the GST is not applicable, they cannot ask GST. How will you provide a GST invoice? How will you procure the GST service where the GST itself not applicable.
Sir,
Is it correct?
Inputs and input services are defined clearly. Okay.
Okay.
So if some third party is providing a service to you, then the question of service will come into picture.
Yes, yes, that is okay.
If your own people, like somebody is asking, sir, employees providing services to me, whether taxable, there is no question. There should not be any question. If at all raised, maybe they may be raised, that we can deal with that. Subsequent level, it will go off. Okay. So there should be some sanctity on the questions raised by them. If something that is not an input service for me or not an input for me, that cannot form part of the construction cost.
Input means input to the construction activity. Generally, it's a cost.
No. See, he should procure. See, that will be there whether or not this project is there.
Yes.
Directly attributable cost. Not you cannot bring every employee cost into the picture.
Yes, sir. Okay. Thank you.
Yeah,
Thank you. That is becoming a hectic task for the resource person. A quick word
anyway,
from
I
our
have shared
chairman.
just my email ID.
Okay,
Anyone, those who have any issues, can. I'm also giving my number.
Okay, sir.
Can mail.
So
me.
a quick word from our chairman, and then to vote of thanks by our host club secretary, Mr. Ravi Kishore, sir.
Yes,
ma'am, please.
Thank you, sir. First of all, I'm very happy that Vijayawada branch is the lead branch for hosting this wonderful program for the 3-day series of VCM on real estate transactions. And I thank Rajkumar Adekia, Central Council member, for initiating, guiding, and leading the program in an excellent way. And I thank other council members, Prasanna sir and Mopal Sridhar sir, for spending their valuable time and giving suggestions for that. And I thank all the 12 chairmen of all the branches of AP for really for your active participation and cooperating and for joining the members in the program. And particularly the members, and I thank all the speakers. Wonderful sessions we had, sir. They are posing the questions in the chat box, so that itself the members have very actively participated in the program and get benefited out of this program. Sir, members, committee is there for us, for you, to conduct more and more number of programs. If you participate actively like this, definitely it will give energy, will boost up our energy to conduct more programs. And thank you one and all. And over to Secretary.
Right, thank you, madam. My chairperson herself has given the vote of thanks. So, lastly, what I can tell is all the branches of Andhra Pradesh, the chairman of all the branches, you please take a lead and you discuss among yourself as to what will be the program for next month. Definitely CAGSR will be with you. He will be always more than happy to share his expertise as far as the planning and conducting and also coding and naming and coining the name of the seminar. He is a sort of expert in coining the names of the seminars. So he will be always with you and more than happy to share his expertise in conducting the VCMs. Thank you one and all. We will see you next time.
Closing comment.
Thank you, sir. Thank you very much. After completion of 3.5 hours also, there are 109 persons, very enthusiastic persons. Really, really hats up to you. Hats up to your energy. Thank you very much.
Thank you, sir. Thank you.
Thank you, sir. Thank you very much.
Thank you,
Sign
sir.
off for now. Good night. See you
Thank you,
next
sir.
time.
Thank you, sir.
Madhuri madam.
We'll be in touch with you, sir. GSR, sir.
As always.
But please give time to us.
Okay, sir.